Hey everyone, there are two mid-tier private banks that I've been tracking for a long time and found them quite promising. It's IDFC First and Federal Bank. IDFC First led by Mr. V. Vaidyanathan and Federal Bank led by Mr. Shyam Srinivasan. IDFC First on one side had a roller coaster journey where IDFC Limited got merged with Capital First in December 2018 to become IDFC First. But this merger had a major challenge where newly formed IDFC First inherited weak asset quality from IDFC Limited due to its high exposure in wholesale and infrastructure lending. On the other side, Federal Bank is one of the oldest banks in the country with presence of more than 100 years now. However, it was under the control of bureaucrats for many decades and its presence was restricted mainly to Kerala and southern part of the region. So on one side, Mr. Vaidyanathan took the mammoth task of cleaning up IDFC First balance sheet and taking it to the path of growth and making it a retail-focused bank. On the other side, Mr. Shyam Srinivasan decided to transform the old traditional banking of Federal Bank to make it a world-class bank with presence across the country. By the way, both of them are highly competent bankers with decades of work experience. They had one bank in common where they both worked. It's Citibank. Then another common aspect in both the leadership was focus on digitization. Both IDFC First and Federal Bank highly focused on digital banking in addition to setting up the right culture to build the fundamental building blocks of the bank. And over the last few years, both IDFC First and Federal Bank have created a strong presence in the Indian banking sector with growth across parameters. But the question is, which bank is better between IDFC First and Federal Bank? So in this video, I have done a comparative analysis of both the banks on more than 20 key parameters based on their latest Q1 FY25 results. But since one quarter of analysis won't do justice to the comparison, I have taken two time frames for comparison. First time frame is year on year, where I had compared their Q1 FY25 performance versus Q1 of FY24. And then I have taken a 3-year time frame to understand their growth over the long term. It was quite a tedious task to go through multiple investor presentations to fetch the data. I hope you'll find it useful. And then I would quickly share the insights from the comparison before I conclude which is a better bank. But before that, a disclaimer that this analysis is only for education purpose. Please do your own research to build conviction before investing your money. And this analysis would be only useful for long-term investors, not for traders. And I've recently done a 3-video series on top FI, DI, HNI I track closely for multi-bagger ideas. I would highly recommend watching that. Alright, let's get started. Alright, so this is the comparison of IDFC First and Federal Bank across two time frames. First is the latest Q1 of FY25 number versus last year Q1 FY24. And the second time frame is the comparison of Q1 of FY24 versus 3 years before data, which is Q1 of FY22. So this is more of a long-term time frame to understand the long-term story. Now, if you look at the deposit, IDFC First deposit is 2.04 lakh crore versus Federal Bank deposit of 2.66 lakh crore. So in terms of absolute number, Federal Bank is slightly on the higher side. However, as far as growth is concerned, IDFC First deposit has grown at 38% versus Federal Bank growth of 20%. Next is CASA ratio. IDFC First is 46.6 versus Federal Bank of around 29%. Now, CASA is current account and saving account ratio, and higher this number, better it is for bank's profitability. And again here, IDFC First has higher CASA. Then next important KPI is advances, which is the loan book. So IDFC First advances is 2.09 lakh crore, Federal Bank is 2.2 lakh crore. Again in absolute number, both are at similar level. However, IDFC First loan book has grown at 24% versus Federal Bank loan book of 20%. Again, in terms of growth, IDFC is better. Then next is retail loan book. So out of total loan book, what is the percentage of retail? And here when I say retail, I include the rural loan book and exclude the wholesale lending and MSME lending. So in case of IDFC First, retail book is 72%, whereas Federal Bank retail book is 45%. So IDFC First is more focused towards the retail side as compared to Federal Bank. As far as retail loan growth is concerned, it is 27% versus the overall loan growth of 24%. In case of Federal Bank, it is same as 20% for retail loan as well. Then the profitability ratio, which is return on equity and return on asset, both Federal Bank is better with 13.6 versus 3% ROE, and Federal Bank ROE is 1.27 versus IDFC First ROE of 0.91. Next, asset quality, if you look at it, more or less both are at same level. Gross NPA of IDFC First is 1.9, Federal Bank is 2. Net NPA is 0.6 for both the banks. So asset quality is same for both. Net interest margin is the margin that bank make on the net interest income, and here it is 6.22%, Federal Bank is 3.16, so much better for IDFC First. Net interest income is nothing but the core income that banks generate from the net interest, and that is 4,695 crore for IDFC and 2,292 for Federal Bank. Then next important parameter is cost to income. This basically suggests the operating efficiency of the bank, and lower this cost to income, better it is. So 70% is IDFC First and Federal Bank is 53.2, which means Federal Bank is more efficient. Its cost is lower as compared to the income. So that is a positive sign for Federal Bank. Operating profit for IDFC First is 1858 crore and Federal Bank is 1500 crore. Now if you look at it, interestingly, in spite of having a high net interest income of 4,695 crore, its operating profit is 1858 crore, so the gap has reduced mainly because the cost to income of IDFC First is much higher as compared to Federal Bank. Then operating profit growth, if you look at it, again IDFC First is much ahead with 30% growth versus Federal Bank 15%. Provision jump, again this is a problem here for IDFC First. Their provisions for Q1 FY25 is 994 crore versus 491 crore provision of Federal Bank, which means IDFC First provision has jumped by 109% versus 10% of Federal Bank provision jump. And that is the reason, in spite of such high net interest income, your IDFC First has ended up with a net profit of 681 crore because its cost to income is high, and then on top of that it reported nearly 1000 crore of provision, and due to that its net profit is lower as compared to Federal Bank. Next, if you look at the net profit growth, Federal Bank net profit has grown at 18% versus minus 11% for IDFC First. Current price of IDFC First is around 75 and Federal Bank is around 200. Then as far as share price growth is concerned, in last 1 year, IDFC First is down by around 15%. So last year its share price was around 85.90 and from there it is down by around 15%. Federal Bank is up by 48%. So last year around same time it was trading at around 135. As far as market cap is concerned, both of them have similar market cap of around 50,000 crore. Finally, the valuation, price to earning of IDFC First is 18, Federal Bank is 12. But here the key parameter to gauge valuation is price to book for banks, and that is same for both IDFC and Federal Bank. IDFC had a higher price to book, but because of recent correction in last 1 year, its price to book is now 1.9. So on valuation front, both of them are at same level. So if you look at it overall, IDFC First has done much better on advances, deposit growth, but because of higher cost to income, higher provisioning, its net profit is on lower side. As far as long-term picture is concerned, in last 3 years, so during Q1 of FY22, IDFC First deposit was 84,800 crore, and from there today it is at 2,04,000 crore. So there's a 140% growth in deposit for IDFC First versus Federal Bank deposit growth of 57%. CASA of IDFC First 3 years ago was minus 8.38%. From there it is at 46%. So a huge turnaround story. Federal Bank CASA was 34.8 and today it has reduced to 29%. Advances for IDFC First 3 years ago was 1.13 lakh and today it is 2.09 lakh. So its advances has grown at 83.9%, whereas your Federal Bank advances have grown at 66%. Next, if you look at retail loan, last 3 years ago it was 70%, today it is 72%. So not much change. Retail loan growth, 3 years it is 87.97%, whereas Federal Bank retail loan has grown at 65.8%. So again, in terms of deposit, advances, retail loan growth, IDFC First has grown at much faster rate as compared to Federal Bank. Then if you look at the ROE, ROA, your Federal Bank has been much better. In fact, IDFC ROE was minus 13% and from there it is now at 8.3. So there's a big transformation. ROA was also negative, now it is positive, but Federal Bank has always had higher profitability in terms of ROE and ROA. Asset quality of IDFC has also improved significantly. In fact, Federal Bank asset quality has also improved. Net interest margin for IDFC was 5.5, today it is 6.2, whereas Federal Bank net interest margin is at same level. Net interest income of IDFC First was 2,185 crore and today it is 4,600. So it has grown at a much faster rate as compared to Federal Bank. Then cost to income of IDFC First is 77%. So 3 years ago it was 77, today it is 70%. So cost to income has already reduced in last 3 years. Bank is given a guidance of reducing it further to 65%. Although Federal Bank cost to income was always lower at 45%, although it has increased in last 3 years. Operating profit of IDFC First 3 years ago was 600 crore, today it is 1858 crore, and in 3 years its operating profit has grown at 209% versus Federal Bank operating profit growth of 32%. Finally, if you look at the provision, your IDFC First had a very high provision 3 years ago, which is reduced significantly, and Federal Bank was 600. So provision has reduced to minus 47%. Federal Bank provision is reduced to 23%. As far as net profit is concerned, your IDFC First was at loss 3 years ago, 621 crore negative. Today it is positive 681 crore. Federal Bank was 367. So net profit growth of Federal Bank is 175% in 3 years. Your IDFC First we cannot quantify because it was in loss, and today it is at very high profit. Current price is 75, 200. So in last 3 years, IDFC Bank has generated around 50 to 80% kind of return, because 3 years ago its share price was around 40, 50. And Federal Bank 3 years ago was trading at 70, 80. So in 3 years, it has generated 150 to 180% return. Market cap is same and valuations are same. I hope you got a fair idea of comparison of IDFC First across your year on year and 3 years ago period. So the key insight is, first of all, on deposit and advances growth, IDFC First is growing at much faster rate as compared to Federal Bank. Second, IDFC First also has a much higher retail loan book composition. Then IDFC First CASA ratio is also much higher than Federal Bank, and its overall net interest margin is also much higher. On expense side, Federal Bank has much lower cost to income ratio as compared to IDFC First. It means Federal Bank has higher operational efficiency. Having said this, one of the reasons is IDFC First is growing its branches at a much faster rate, so its operating expenses are on higher side at the moment. Then IDFC First also has a high operating profit growth as compared to Federal Bank. But it also has higher provision as compared to Federal Bank, and because of higher provision, IDFC First net profits are also on lower side as compared to Federal Bank. Moreover, Federal Bank has higher profitability in terms of return on equity and return on asset as compared to IDFC First. Then on asset quality, both have similar asset quality in terms of gross NPA and net NPA. In terms of wealth creation for shareholder, Federal Bank has generated much higher return as compared to IDFC First over the last 1 year and 3 year time frame. Finally, on valuation, both have similar valuation as at price to book of 1.9, and the valuation looks quite attractive. Overall, it's a mixed set. IDFC First growth is much higher than Federal Bank, but its profitability is lower than Federal Bank. And due to high provisioning, IDFC First net profits are on lower side as compared to Federal Bank. On valuation, both have similar valuation. So there is no clear winner as such. Now let us look at the expectation for the near to long term before we conclude which is a better investment opportunity. Friends, first of all, there is an important update on Federal Bank. After serving as MD for 14 years, Mr. Shyam Srinivasan will step down on 23rd September 24 due to RBI norms. He will be replaced with Mr. Krishnan Venkat Subramaniam, a banking veteran who previously served as joint MD of Kotak Mahindra Bank. So Federal Bank has a very strong succession plan. There is also an update on IDFC First Bank. They have recently successfully raised a preferential round to raise 3,200 crore capital, and it attracted top insurance firms of India. Hence, in its latest holding, DI's stake is up from 7.9% to 12.8%. Now, as an investor, there are two aspects of looking at future prospect. One is you look at quarter-on-quarter performance and decide what to do. On that, IDFC First net profits are down due to high provisioning. Its share price has been correcting and consolidating for almost 1 year now. Federal Bank on another side has generated good return in last 1 year. However, if you look at the long-term picture, both Federal Bank and IDFC First have done well in the last 3 years in terms of business. So in the near term, there can be hiccups, but I believe that banking system is the backbone of any economy. If the Indian economy has to grow, banks will play a very crucial role. Hence, I've always been bullish on top private banks of India. Of course, it would never be a smooth ride. In fact, just a few years ago, we witnessed how COVID created havoc in banking sector with a fall in asset quality. And currently, private banks are facing another challenge of pressure on net interest margin due to higher cost of funds. Having said this, I believe that the long-term growth story of good quality private banks is completely intact. As far as future guidance is concerned, IDFC First shared a 5-year guidance for the bank during 2018 at the time of its merger. And fast forward today, bank has achieved majority of its guidance across asset and liability side, except for a few metrics like cost to income, ROE, ROA that are delayed. Now bank has again shared its 5-year guidance for 2029, and this time the key focus is on profitability with high ROE and ROA. If bank can achieve this number, it expects to touch net profits of 12 to 13,000 crore as compared to 2,232 crore currently. On the other side, we'll get a good clarity on Federal Bank future expectation once Mr. Krishnan Subramaniam joins the bank. So overall, I believe that if we ignore the short-term volatility, both banks are looking quite promising for long-term wealth creation. And the valuations are also quite attractive. Okay, I don't want to stress this video further. By the way, if you like this analysis and need more guidance on investment, I have a close community of serious long-term investor via my exclusive weekly video series. In this series, I keep a close eye on key government initiative and discuss the potential companies along with stocks where I am investing my own money. I also track the quarterly results of more than 200 companies. But this is again not a stock tip. The idea is to share my conviction as I spend almost 8 to 10 hours a day keeping a close eye on the market. For more details, you can explore my website or check the join button on my YouTube channel. So this is it for this video. If you find it useful, do share it within your circle. I'll see you next video. Till then, take care.